you most likely didn't even realize that the world had changed. A silent revolution is occurring behind the scenes of world news cycles and political unrest, one that will shape economic dominance for the next century. In order to demolish the US currency and establish a new monetary order, the BRICS countries, Brazil, Russia, India, China, and South Africa, have gathered behind closed doors. And at the core of this strategy is something that few Westerners could have foreseen: XRP, as the settlement layer of a brand new global currency supported by commodities, not as a speculative asset or simply another cryptocurrency. The BRICS alliance is getting ready to value XRP at $100,000 per token based on gold reserves, commodity collateralization, and global trade velocity, per documents that were leaked from the meeting. This is the pinnacle of economic warfare, not theory. Let's back off a bit. The BRICS alliance has long aimed to break away from financial institutions in the West. They believe that the World Bank, the International Monetary Fund, and the SWIFT system are outmoded, controlled, and swayed by American interests. They have been laying the groundwork for something new for the past 10 years. A separate banking system that is politically impartial, sanction-proof, and tailored for the digital era. The urgency is now different. The timescale has accelerated due to the dollar being weaponized through trade disputes with China, sanctions on Russia, and inflationary monetary policy. The BRICS countries are aware that they need to take action, and they need to do it quickly. Why XRP then? For their new global reserve system, why would some of the world's most potent emerging economies choose a token created in the United States? Utility and neutrality hold the key. Unlike Ethereum or Bitcoin, XRP was intended to be a cross-border liquidity mechanism from the beginning. It doesn't require mining, settles in seconds, and is almost free to use. Above all, it functions independently of any particular country. It is sufficiently developed to interface with central banks, payment processors, and extensive financial systems while remaining sufficiently decentralized to prevent sovereign bias. It's already in use, which is possibly even more important. More than 70 nations have already incorporated RippleNet, the company's worldwide payment network. Major financial institutions have found that the on-demand liquidity mechanism, which employs XRP as a bridge asset, successfully lowers transaction costs and settlement times. XRP provides a plug-and-play solution for the BRICS countries who seek a quick, scalable, and apolitical link between fiat currencies and commodity-backed systems. They are not required to start from scratch. They are not required to wait or have faith in the US dollar. Let's now discuss the purportedly leaked BRICS summit agenda. A multi-phase proposal to implement a digital commodity settlement layer is described in this internal communication sent to central bank officials. This contains a currency basket supported by exports of agricultural products, gold, oil, lithium, uranium, and other tangible commodities. In order to enable immediate exchanges between local currencies and the Commodities Reserve Unit, XRP has been chosen as the bridge asset. In this proposal, XRP serves as the liquidity layer for the new global trading standard, replacing central clearing institutions and SWIFT instead of fiat. This is the startling part. A valuation model for XRP based on the entire amount of international trade that the BRICS nations hope to settle through this system is included in the letter. Assuming a cautious float of 5 to 10 million actively circulating XRP in that system, the model predicts that XRP must be valued at $100,000 per token to maintain sufficient liquidity across corridors, given the over $6 trillion in annual trade between BRICS states. It is not a figure taken from a dream board. It is founded on the need to prevent slippage in high-volume trades, balance sheet modeling, and real-world liquidity requirements. The BRICS gold reserves alone would require a valuation in this range for the XRP float, according to an anonymous Swiss banker cited in the story. It's not hypothetical, it's mathematical. Take a moment to process that. Hype isn't the point here. It has to do with function. It involves designing a system in which XRP serves as the unseen catalyst for the new global economy and the lubricant that keeps the wheels turning on the cross-border commerce machinery. We now need to think about the consequences. The biggest change in global financial dominance since Bretton Woods would occur if the BRICS countries formally adopted this idea. International settlement would no longer be dominated by the US dollar. Gold would reappear as a layer of collateral. Reserve currencies would be based mostly on commodities. Additionally, the protocol layer for international value exchange would be XRP, the once disregarded banker's coin. Of course, the West would fight back. There will be political opposition, media denial, and perhaps even regulatory crackdowns. However, the momentum is already irreversible. Already the infrastructure is being installed. In India, Singapore, and Dubai, Ripple has already established operations. Wholesale CBDCs on Ripple's ledger are being tested by central banks. In Africa and Latin America, ODL routes are growing. Additionally, big banks are quietly getting ready for on-chain liquidity sourcing. What does this signify for you then? It indicates that a new monetary era is upon us, with XRP at its center. For investors, this isn't about following a trend. It has to do with setting up a systemic reassessment of the global flow of value. There is more to it than XRP reaching $5, $10, or even $50. The goal is for XRP to become the accepted, implicitly backed unit of liquidity in the digital age. Buy gold, oil, and trade, the very commodities that gave money its historical significance. However, time is crucial. The price won't wait for retail once this strategy is made public. The framework is announced by the BRICS leaders, RippleNet integrations are made public, and commodity baskets are tokenized and exchanged on the chain. The market will be led by institutions, central banks, and sovereign funds. You'll hear terms like liquidity crisis, XRP supply shock, and exchange delistings because of inventory constraints. Many thanks for listening. Please remember to hit the subscribe button and give the video a thumbs up if you liked it. To be the first to know when I post new stuff, make sure you have enabled the alerts as well. I can't wait to see you again in the next video. Be careful.